Good afternoon to those of you on the East Coast, and good morning to everyone else. My name is Jason Rosenkranz, and I work for BackNine Insurance and Financial Services. And I would like to welcome you to our webinar on the tax advantages of life insurance. Now, just so everyone knows, they will be muted for the duration of this webinar. And if you have any questions or comments, please feel free to call or email me with those questions. Now, if you would please take a moment to read this disclosure, and we will begin. What is insurance? As you know, insurance is designed to protect your earnings and your retirement. Insurance can take many forms, from health insurance to automobile insurance, income insurance, long-term care, life insurance, which we will be discussing today, and homeowners insurance. Term insurance. Term is designed to provide a designated benefit period ranging anywhere from 10 to 30 years. It provides the lowest premium of any type of insurance. It does not have any cash value, which helps keep the cost of insurance low. And many of these products can be converted to a permanent insurance policy with no additional underwriting. This means if you were to take out a 30-year term and wanted to convert in year 20, you would be able to at no increased rating. And again, all of these death benefits are passed on tax-free to your heirs. Now let's take a look at a case study. Here we have Kevin. He's a 40-year-old successful executive with 3 children and a wife. He intends to retire at age 70, and it is critical over his next 38 wage-earning years that he has affordable protection for him and his family. After speaking with his financial advisor, he has been advised to purchase a 30-year term with $1 million in tax-free death benefit. This policy will have an annual premium of $1,212, and this premium will not change for the duration of those 30 years. Whole life insurance. Whole life provides protection for your entire life. It won't expire or go down in value. Whole life provides you with level premiums that will not increase, and in fact, as the policy ages, those premiums will begin to decrease and eventually disappear. Cash value. A portion of your premium builds a cash value account, which grows tax-deferred and can be borrowed against. And again, this policy provides a guaranteed death benefit that is passed on tax-free to your heirs. Now let's take a look at a whole life case study. Here we have Sarah Parker, age 43, with 2 young girls, ages 6 and 8. Sarah wants to increase her insurance coverage and add to her retirement savings before her children begin college. She would like to pay premiums within a constricted time frame, and this policy must allow her to conservatively save for that retirement while providing the protection her young children need. Her solution is to apply for a 10-pay whole life insurance policy that provides a guaranteed tax-free death benefit of $300,000. This policy will remain in effect for Sarah's lifetime and be fully paid up after 10 years of premium payments. Because of the limited duration of the premium payments, the policy will accumulate cash value tax-deferred, and it can provide supplemental income in retirement if needed, while most importantly providing that essential protection she has desired for her daughters. Now let's take a look at the many forms of universal life insurance. The first being guaranteed universal life, otherwise known as GUL. This allows the client to lock in a guaranteed death benefit and premium for a defined period of time. This can range to age 90 all the way up to age 120, depending on the client's desires. Next, we have our Survivorship Universal Life Insurance, otherwise known as an SUL. This is a second-to-die policy, meaning it insures two people under one policy, and the death benefit is paid tax-free upon the passing of the second individual. Typically, we see these used to help with estate tax problems and provide funds for other settlement costs. Next, we have our Variable Universal Life Insurance. This is our most aggressive form of universal life insurance in that it allocates a portion of premium dollars into a separate account comprised of different investment funds within the company's portfolio. These include and are not limited to stocks, bonds, equity funds, and money market funds. These stocks and bonds are taxed differently than traditional stocks, which we will discuss later on in the presentation. And as a side note, the agent selling a VUL must have their Series 6 and 63 to sell. Now we're going to discuss Indexed Universal Life Insurance. This is the most flexible form of universal life insurance. It provides the client with an opportunity to allocate cash value into a fixed account or equity indexed account. Most commonly, we see this take the form of the S&P 500. It allows the person to have exposure to the stock market while providing strong guarantees and that tax-free death benefit. Now, with term, whole life, and universal life, they have many benefits, and we are here to find them for you. Some of these uses are listed below. We have found creative tax advantage opportunities in funding college accounts, emergency funds, and wealth replacement using tax advantage cash value accumulation. On the business side, we have seen life insurance used to fund key person insurance and employee benefits in the form of company-owned life insurance, otherwise known as COLI products. When a firm purchases a company-owned life insurance, they may receive tax deductions when they provide the premium benefit for their employees. Now, I want to talk about the best kept secret in life insurance, and that is that it creates non-reportable tax-free income. Now, chances are your client's money will fall into one of the following three buckets. This is our first bucket, which is pre-tax, and it is comprised of 401ks and IRAs. And when withdrawals are taken from this bucket, it is taxed as ordinary income. The next bucket is our taxable bucket, which is funded with after-tax dollars and is comprised of stocks, bonds, and mutual funds. And again, when withdrawals are taken, it is taxed as capital gains. Finally, we have our third bucket, which is our tax advantage bucket. This is comprised of municipal bonds and Roth IRAs. And withdrawals from this bucket are now tax-free to the individual. Now, let's take a look about something that your clients are familiar with. Prior to age 59 and a half, if they take money from the pre-tax bucket, they are subject to a 10% penalty on top of their ordinary income tax. After 59 and a half, that 10% penalty goes away and they are taxed at ordinary income. Now let's take a look at age 62. If the government has deemed that you have too much modified adjusted gross income, 85% of your Social Security benefit will now be subject to ordinary income tax. Moving along to age 65, again, under the government's discretion, if you have too much modified adjusted gross income, your Medicare Part B costs will now skyrocket from $105 to $336 a month. Now, at age 70 and a half, if you had not taken any distributions from these funds, required minimum distributions will be enacted, and that will increase your tax exposure. Next, let's take a look at the same timeline had you used after-tax dollar cash value accumulation life insurance. Prior to age 59 and a half, you are able to take tax-free distributions without penalties. Again, after 59 and a half, you have the same benefits. At 62, there will be no effect on your Social Security benefits. 65, your Medicare Part B costs will be left alone. And at age 70 and a half, there are no requirements to take distributions. So what we see our agents advising our clients is if they can fund this portion of their life with after-tax life insurance cash value accumulation, they can let their Social Security, IRA, and 401k continue to grow at the 6, 7, and 8%. Now let's take a look at a sample case study. Steve here is 45. He has a wife and 3 boys aged 2, 4, and 6. Steve is concerned about college costs and funding his retirement because he has maxed out his 401k and IRA. He wants to fund a product over a short term to allow the most time to accumulate cash value, and he wants to make sure there are downside protection in the event the market turns. For his solution, he has consulted his tax professional, which has advised him that he purchase an IUL with a face value of $536,000 funded under a 7-pay scenario paying $25,000 per year. Under this scenario, he will have $264,000 in cash value when his oldest son begins school. Now, if his oldest son is fortunate enough to have a scholarship, he can let that cash value grow, or he can access that cash value and defer taking withdrawals from his IRA or 401k. And again, that death benefit is passed on tax-free. Now, as an overview, you can see life insurance can be as aggressive or conservative as you want. On the conservative end, we have term and fixed insurance, which you can see on the left. Towards the aggressive side, we have variable life insurance, which is on the right, and straddling the middle is indexed universal life. It has some strong guarantees and allows exposure to the market. And again, all of these products have guarantees that are backed by the insurance company. Finally, has this ever happened to you? You've been sitting with a client and you're doing a fact finder and they tell you they have life insurance, but they don't know what they have. Well, we here at BackNine have created a policy review. This is a 1-page document that requires the client's signature and policy number. And once we have obtained that, we then run an apples-to-apples comparison against our carriers and give you a printout such as the one you can see on your screen now. In undertaking this review, we can find an opportunity to replace the policy at a lower premium and higher death benefit, or take advantage of a conversion window that the client may not have known they had. And finally, this product can be branded with your company name or logo to help with your marketing. And lastly, we have here our portal. Now here at BackNine, we have built this portal in-house. It is completely proprietary, and it was built with you, the agent, in mind. It helps to streamline the selling of life insurance in allowing you to view case requirements, view commission schedules, run quotes and illustrations, along with pulling the applications and it allows you to speak with myself and my case manager, Cindy Gillis. I would like to thank everyone for attending the presentation today. If you have any questions, I am a resource for you. We have life, long-term care, annuity, and disability coverage, and if you need any assistance, do not hesitate to call me. Everyone who attended today will be sent the documents from the presentation. Again, thank you for taking time to join me today, and have a great day.